This is so massive that I can't even showcase these numbers because nobody will believe on this. Starbucks launched the NFT program, Lufthansa launched the NFT program. VCs that invest on tokens are already tokenizing part of their investments. The use cases are endless, and this powers metaverse use cases for the future: gaming, art, financial ecosystem. The NFT market, it's already above $2 billion in a loan volume. It's a market in expansion, even with the contraction of the crypto market. It's an opportunity that was too big to ignore.
We have today Nuno Cortesao from Zharta. So he is the CEO and co-founder of peer-to-peer NFT lending platform that is following the borrow-friendly philosophy. So they have raised already $4.3 million in dollars, growing very fast. So they just actually made the milestone of 3 million of all-time loan volume, and in June they celebrated 1 million, so you can imagine what is the growth there. So congratulations, Nuno, with such achievements. So let's talk about NFT lending, future of NFTs as well. But in the beginning, let's focus on yourself. Who is Nuno? So tell a little bit about yourself, and also it would be very interesting also to understand a little bit more from the point how you change your mindset from the corporate world, because before you've been working as a consultant, right, blockchain consultant, and then going to startup world. So it's very different worlds. One is more regulated, more with rules and guided, and startup, and especially, DeFi is not at all clear. So tell about yourself.
So I'm Nuno Cortesão. As you said, I'm one of the co-founders of Zharta. On my experience, I was the head of blockchain at Accenture in Portugal, also on entity data, and I worked at Vodafone also as subject matter expert. I work in blockchain since 2017. So I'm a mechanical engineer that hated to be a mechanical engineer. So I went to consulting, innovation consulting early on, worked on banking, worked on several industries. And in 2017, I was coming from a project in the banking industry for fraud detection with AI. I was at Entity Data at the time, and they were exploring the blockchain division. They were trying to set up a few proof of concepts, gathering some initial clients. And I was already inside of the crypto rabbit hole. I was doing some personal investments. I was exploring the technology.
So what year was this?
This was early 2017, end of 2016. So it was more or less around this. It's kind of foggy when I started, because we started to create some ideas, some internal drafts to sell to clients. And then we realized that there was a possibility to create a very nice proof of concept at the time to build a supply chain mechanism using blockchain in the underlying, and we had a client that wanted to test the solution. So everything started very quickly at the time, and I fell in love by crypto, by blockchain. We started assembling the team, and it grew from there.
So did you meet your co-founders at the job?
No, in reality, no. So we are 3 co-founders. It's me, Pedro Granat is our COO, and Diogo Pires is our CTO. So I met Pedro 20 years ago, maybe. We were part of the same class for almost 20 years because we studied in the same schools, in the same university. And then when we finished our college degree, Pedro went to work at Bosch, to work on field of engineering, and I went to consulting. Diogo, I also met 15 years ago. So we met through some mutual friends, And then we studied also in the same engineering school. We were always seeing each other. The three of us, we met also we were typically together on the university. And it's funny because when I started my career in blockchain, Diogo also started his career in blockchain. So it was at AppToys, that is a marketplace for apps. That's kind of competition for Apple Store and Google Play and stuff like that. And Diogo started.
I'm an investor actually from
Really?
Okay. Yeah.
Okay, I had no idea. And so Diogo started working on blockchain because they were exploring AppCoin as a potential.
The first ICO in Portugal.
Yeah. And it's very funny how we kicked off Zharta, because we were always having ideas on blockchain, and I was chatting all the time with Diogo on these kind of things, and he would give me ideas, I would say no, I would give ideas, and he was saying always no, like no, terrible idea, this doesn't work. And when I pitched Zharta for the first time to Diogo, we went like stopped in silence for a bit, a very big bit. And then I realized he's not going to say no this time. This is a good idea. Maybe we can start creating something here. And he said, yeah, I think that can work. I see very big potential on that. Then he told me like, hey, we need more people in. And I have like this bright friend that's great on operations, senior project manager. Let me call Pedro and let's kick off a team. And so it kind of how we started, then we started working together. Some people in the early stages also were contributing with ideas, with some work, but the three of us went through to the quitting our jobs, kick-offing the company, starting building a prototype, and then it's a long journey that it's almost 1 year and 10 months at the moment. So
how do you find yourself with this transition from the corporate world startup?
I think one of the things that made us move and to create our own startup and to explore this space, it was the fact that in the traditional world, you have a very big set of boundaries. You have projects that are defined, and things have to have their own pace. All the companies they work on the companies that we worked are very efficient companies, but you feel that there is a pace to deliver things, because companies have to give very steady paces on creating innovation. And we saw this very big opportunity in the NFT market. A new class of assets was being built, no financial infrastructure whatsoever, and so we realized that it wouldn't be possible to tackle that on a corporate level. So we realized that to tackle as fast as we could the market, we needed to go into this journey. And the startup world, it's in a way is very similar to consulting. I feel that consulting is interesting because you are always having different projects, so you are always creating new ideas and trying to tackle new challenges. But you have some best practice from the past. People that built things before you can reuse, you can work with that. In the startup world, it's a complete Texas. So it's a very interesting and demanding path, but also very rewarding, because when you start getting some traction, when you get people excited with your idea, with the ideas that are being built, with the things that have to be done, when you start achieving the results, you start getting milestones, start see that you are building something from scratch that didn't exist whatsoever. So it becomes very, very rewarding. And I think the biggest champ on all of these is the feeling of stability, I would say, because when it's traditionally to kick off a startup, you need to bootstrap, you need to typically don't raise before you quit your job. That's one of the first lessons that you learn, is that it's very hard. Like VC companies, even business angels wants to see a very big commitment on your side. They want to know that you believe on what you are doing 10 times more than them. And so they want you to be fully on that. beforehand any kind of investment. So you need to give a very big jump, and you have to justify to family, because people that care about you will ask like, hey, you are leaving your job, are you okay? Like, are you going to be unemployed? What's happening here? But if you truly believe that what you are building makes sense, you can create some, you can inspire everyone that care about you to also be excited, and you feel that excitement, and then it's a snowball that unlocks, and that you start all of this. So it's a very big step.
Awesome. And so you've been saying that you've been pitching several ideas, right? So to your co-founder. And why NFTs?
I think the reason we went to an NFT idea, it was because it was very uncharted territory. So we are, me and Diogo, exploring blockchain since 2017. Pedro also in the space for a long time, more at a personal level. And when we saw, and we were building DeFi products kind of in our companies, and the NFTs, we realized that there was a very big opportunity because of the potential on what NFTs represent. And it's hard to define NFTs because NFTs are digital objects that can have multiple uses. It's hard to predict what they are going to be in 20 years. It's hard to explain what they are, because it's like explaining on an early stage what's the internet. They are non-fungible tokens. They are digital objects recorded in a blockchain that have unique properties. And this can underpin a myriad of use cases. The first use cases that we see, it's around in the art, in the PFPs, so creating assets that are unique and that are collectibles, and that they can create a way for users to have digital property in the digital realm. But we are starting to see NFTs getting into a second level, and I can give you an example. Uniswap positions, the V3 are already NFTs. It's a digital object that represents a financial position with a set of parameters that are embedded inside of the NFT. So we are not talking anymore about only art. We are already talking about a new kind of digital asset that's a financial asset. Alone in the NFT market, some of the platforms use promissory note. So they create a loan that is an underlying asset supporting that loan, that has a set of rules, that they talk repayment, the principal that has to be paid, what are the values to be paid, and it's a digital object that it's an NFT. We see NFTs being used as representations of SAFTs. So VCs that invest on tokens are already tokenizing part of their investment, so that they can start having capacity to have more liquid positions. And we see that NFTs are going to support the majority of financial objects. If you start to think what's a bond in the financial ecosystem, a bond, it's a digital object with a set of rules, a set of unique parameters. If it's tokenized on a blockchain, it becomes way easily transacted, more cost efficient. So these are the kind of things that we are seeing. And we also see NFTs as very powerful tools for gaming assets that are in games. What's a skin on Fortnite nowadays? It's a set of image that it's a digital object with specific properties. If it's tokenized in a blockchain, it's easily transacted, it's easily transferred. It can create then, the use cases are endless, and this powers metaverse use cases for the future, gaming, art, financial ecosystem. So we started to see the big picture, 2 years ago, we realized like we have this new class of assets that we cannot even predict what's going to be. I was working on selling projects on consultancy, creating business plans, all of that. And when I started doing the business plan for this, I was like, this is so massive that I can't even showcase these numbers because nobody will believe on this. This doesn't make sense. And all the things that we started to, it's showcased us the possibility of the future on this. And we realized that a full class of assets didn't have any kind of financial infrastructure. So it was a no-brainer. We can join DeFi into this new class of assets that's already in the blockchain. And it's an opportunity that was too big to ignore. And I think that was the reason why we looked into this with so much eagerness. It was like, okay, this is something that can be a very powerful business in the future. So let's jump with our heads into this and let's see where the rabbit holes end.
And what is exactly like the need of NFT lending? So can you explain more on that? What is the market need? So why you started with exactly this piece of like NFT lending?
One of the key points that we realized that NFT lending was a need is because every time that you have a class of assets that hold intrinsic value, and we believe that NFTs hold intrinsic value, they typically have financial support. People nowadays in traditional markets, they lend against everything. You can lend. The majority of people, normal people, they will do a loan for an house, or they will do a personal loan for some specific use case that they need. I don't know, vacation, construction work, or a car, whatsoever. But people lend against everything, like commodities. And people on the B2B side, that's one of the biggest markets in the world. And the NFT market was starting to be a very big industry. Last year, it was around $20 billion when we kicked off all of this, and it didn't have any kind of financial support. And so we realized that the use case for users that were buying NFTs, and the majority, things that were illiquid, art, PFPs, they wanted to continue to optimize their capital. So if you believe that something will hold value in the future, you may want to leverage that asset because you basically can request a loan. You use the asset as a collateral that you are not intending or planning to sell. And you use the funds that you unlock during the periods till the due date of the loan to do other financial operations. And so that was a very powerful use case at the time. We also saw, and now that we are a bit more mature in the market, the lending that's being applied, and our lending in particular, the loans have a due date, so the users are not liquidated until the due date, and that's one of the reasons why we are borrow friendly. And so users also started to request loans as a way to create an option, so created a put, because they basically created a way to request a loan and ensure that in case the value of the asset, if it drops in the future, they at least ensure a minimum value unlocked on that asset. So we see this kind of sophisticated users requesting loans. We see the less sophisticated users also requesting loans for being able to tap into new opportunities. And now the market of NFTs is starting to be way more mature. Different lending platforms with different use cases. A few focus more on fast lending for very short operations. Some platforms operate for longer periods. We have already platforms of options. So the amount of things being built, we are mimicking everything that exists in DeFi, everything that exists on TradeFi. It's going to be designed and translated to the NFT market, and there is demand. The NFT market, it's already above $2 billion in a loan volume. So it's a market in expansion, even with the contraction of the crypto market, which is very interesting.
Tell about more about how NFT lending works. Like example of like Zharta, maybe you can explain why is it like you're having this like instant NFT lending, why you call yourself instant?
Lending, it's not new. It's one of the most old business in the world. And here we have digital objects that have intrinsic value. And we, on the NFT lending market, there are two major currents, I would say. There is the peer-to-peer solutions and the peer-to-pool solutions. On the peer-to-peer solutions, it's similar to kind of eBay, marketplace logic. You have someone that has an asset that wants a loan, and it will request for a set of terms. And then you have different lenders that are able to fulfill those loans, or that will try to negotiate because they feel the price is not right, interest rate is not great, the period is big, is low, I don't know. Different lenders have different philosophies. They will try to get something that fills their thesis, and the borrowers know why they are getting a loan, so they will try to negotiate the terms to something that makes sense. Then we have this magic of DeFi that allows to create instant solutions. And the peer-to-pool system works more in that sense. So we have a pool where different lenders deposit funds, and that pool is able to fulfill loans that are being requested by borrowers. What are the advantages? It cuts times of negotiation, it's more cost efficient and more risk adjusted for lenders. So on a peer-to-peer lending, typically the user will request a loan, a lender will give a loan, so we'll get exposure to one asset, one loan. When we have a peer-to-pool, we have different lenders, they are all together, so every time that they fulfill a loan, the different lenders have a bit of risk that is split between the amount of the funds that they have in the pool. So it's better for lenders that don't know so well the NFT lending market, that want to have exposure. It's a very easy way for them to tap on a good, seamless experience. And at the same time, it also helps them to reduce risk because they do loans against different assets, and then it's the net value of everything. One loan, if all the loans are performing super well, oh, perfect. That's never the case in any business. So the good loan, you have exposure to loans that do great, loans that do okay, and so it's the blend between the different interest rates, the different risks, the defaults, the wins that make the final result to the lender. And this is very interesting because when we are on this DeFi space, the lending can be instant, and we built a set of smart contracts that provide the terms to the borrower. And if they provide enough collateral, so if they provide enough value of NFTs, there is a set of business rules that are coded in the contract. They get a loan without barriers if there is liquidity. So they can request a loan of 1 million in minutes. And this becomes very interesting when compared to traditional world. Just to give you an idea, Sotheby's give 50% of, if you buy something on Sotheby's above $1 million, I never bought because I don't have $1 million to buy things on Sotheby's yet. And for now, maybe one day. But if people that are on Sotheby's and buy something above $1 million, Sotheby's they have a venture arm and they have financial providers that they will give on spot, on the hammer, 50% of the value to the buyer on a loan. This is a typical action in the top art, traditional art segment. But this can take, and is with very big reputable companies, can take 1, 2, 3 months to settle the loan, get the terms, custodial of the asset, all of this. We are talking on smashing the time frame 2 minutes on this. So you see the powerful of how DeFi, smart contracts solutions can bring to people that are more savvy in the financial side. And there are two things, and just to now that we are going to the rabbit hole of NFT lending, on the pool side, there is also two kinds of solutions. Solutions more similar to Aave, that perpetual loan, request a loan, and you are always balancing the collateral that is inside, and you are paying the interest rate. Or solutions like ours, that is based on maturity. The loan is provided, and then there is a due date to repayment. You were saying that we have the philosophy of being borrow-centric. We were kind of the promoters of the borrow-centric philosophy in the NFT lending market. We realized that by the majority of NFTs on the art segment, the users has strong ties to the assets. And the solutions that were designed on the DeFi space for cryptocurrencies that are more liquid don't apply so well on the NFT market, because users get, every time that they get liquidated, maybe they never tap again to the asset that they hold in the past. And so we created an hybrid, and was kind of a new primitive of DeFi that was pools with maturity date. So the loan would occur during a period of time, and then on due date, if the borrower repays, he gets the asset back. If he didn't repay, it goes to a grace period of 2 days to give an opportunity, because from time to time people forget to pay simple loan, they don't have the liquidity, I don't know. We try to solve these hurdles, and then they get liquidated in the end. But we were able to tie these two philosophies together. DeFi instant loans, but at the same time with maturity dates, to create a most solution that was more tailored to the borrowers of the space. And the angle of doing this was, if we have enough borrowers, we have enough deal flow, we have more lenders, everyone in the ecosystem wins, and we create a fair ecosystem for borrowers and lenders.
And you mentioned something interesting. So 1 million in certified, so not really ready to spend yet, right? So what about your kind of solution? So who are lenders and who are borrowers? Is it like, can be anyone? Is it like, because obviously like traditionally piece of art is kind of like expensive for like a average person.
So that's an interesting question. So we created, our solution is based on pools, and we tailored the solution to create, we started with a pool of it that anyone can go and deposit funds. And so anyone that can have and that wants to have exposure to the NFT market can go there and deposit funds, and then they will get a yield based on the performance of the pool. It's not financial advice, of course, but it's made a sense to democratize the lending space. We created a solution that allow for users to request loans. The business rules are upfront, and we communicate any modifications on the business rules. We build in public, on Discords, GitHubs, all of that. And so every time that there is a change, we give good upfront recommendations to the users, and anyone can deposit funds in the pool, and the funds are used to fulfill the loans, the most normal ones. Then we realized that there was demand for USDC loans also. So the users all wanted ETH loans, because that's traditionally what operates on this space, but they also started to want USDC loans. So we created a pool with the same logic, with different business rules that was designed for stables instead of ETH. And now we are rolling out some private pools with specific business rules for more sophisticated lenders. So one thing is to do loans against assets that are very liquid, very easy to liquidate, that market conditions and market prices are super available, and it's kind of what underpins our pools, more traditional ones. But when you start going into high-end art pieces or high-end CryptoPunks or things that are lending against Uniswap V3 positions, these are the kind of things that need more sophisticated users to because they need to understand what's going to underline the loans. In case of default, they are going to be the ones that have the defaults on their possession to be sold. So we are fully non-custodial on our operation. We never. That's the beauty of the DeFi solution, is that we created a solution with a set of business rules. Everything is upfront known by the parties, and we never take in custody the assets to Zharta. So that's always on the process of the smart contract. And we started to create some business concepts around specific pools to segment different kind of the market with different rules. For that, we are rolling out some proof of concept with some institutional lenders and users that are more savvy on the financial side. But we plan to, as these solutions mature, we plan to be to open these kind of solutions to anyone to tap in.
How do you acquire the users? I mean, right now, like, you need to have like lenders, but you need to have also borrowers. So at this moment, like, there is no communication layer between wallets. So first of all, you need to target specifically people who already have these NFTs to put as a collateral, right? So that's people who are already quite active on the market. From another side, you need to also to attract users who can be lenders, who also are more sophisticated still in terms of financial knowledge, and also understand what does it mean. So they need to have wallet, they need to have also some crypto. So how do you acquire these users? How do you target?
That's a very interesting question. We are a startup, so I can tell you that we hustle a lot to get users. It's funny because we are building a DeFi solution, so we are not a marketplace, but we have needs of supply, needs of demand, and we are kind of a synchronous marketplace in a sense, because the lenders deposit. If there is funds on the deposit side, we can lend. So it's a very interesting dynamic. We have been working on several strategies, from sometimes reaching out directly to users that we know that have assets that are interesting and that we know that interact with this kind of market. We give a flavor of what we do to see if it's interesting for them. We also worked a lot on the marketing side. We have been trying so many things on the marketing side so that we can appeal to the market. And this is a very difficult challenge. It's a niche market yet. How do you get the users that have this kind of NFTs to know that they can lend against an asset, and then they know that they can request a loan on us? So these are different levels in the funnel to reach the users. So
what did you try? What worked? What didn't?
We tried so many things. We tried from different narratives, different image settings, friend get friend. We tried direct DMs. I don't know. We tried so many things in the marketing side, and we have the challenge. We kind of went with the logic of 110. 108 users. This was our metric that came from our head of marketing. That was very funny. That's like typically is 110, 100 is what brings you the first user. It's not what's going to bring the first 10. It's not going to be what brings the first 100. We have an internal joke with 108, and so we made this, and we tried different things on Twitter, on Discord, things about more community-driven, things about more financial-driven. So we tested, and we are always testing new solutions. We see what are the results. 1 week, 2 weeks, we iterate. If it's giving good results, we double down. We see if the results are replicable, or if it's maybe we done some post with some kind of image and artworks and all of that, and maybe it got traction because I don't know, and it will not be replicable. And we try to identify the patterns of what we test and what really, every time that we do it, it always gets bigger reach or similar reach. And we are starting to have already in our playbook things that we already know that works, and that's very interesting. Another part of this is also about referral, and referral from the users itself, not being driven by us. We have metrics of conversion, of retention that are unlikely to have anything that I've seen. We have like 90% retention. So every user that uses Zharta comes again, which it's very interesting. And what we have starting to see is that these users also recommend other users, because when we get a new user, we are on the Web3 space, so there is a very big layer of anonymity, typically based on wallet, but we have people sometimes join our Discords, we try to interact with them, we try this kind of direct channels to understand, like, why did you came? And then we can see also, we can validate our marketing testings, and we have a very big chunk of the users that said that someone recommended because they used it and they liked it. So this is how we have been tapping on the borrowing side. On the lending side, it's also by leveraging our network. The opportunities are good. The yield, we have been on operation for the last 8 months. Our yield, it's stable, and the solution, even with there was a drop in the NFT market on the value of the assets, our solution continued to play and to withstand those blows very well. So it has been a lot based on this logic of iterating.
So if you would just like very quickly just say, for example, so in user acquisition in DeFi, so what works and what doesn't, like very quickly.
So what works on the Web3 space? Creating content that's your own content and that brings value and that leverage other communities that are with you, and communities when you start creators. If you start finding creators that you like, that you feel that there is angle to collaboration, build content around what they are building, something interesting. Going to Web3 events. I know that this seems obvious, but not everyone does it. People that are introverts will not do it on a natural way. So that's the cool part of having different founders and different teams that complement each other. Get someone that is extrovert, or if it's not extrovert, that has the power to go there and chat and network and go to a Web3 conference, get the first 100 people interested in your business there. Just make them follow your Twitter, and then you get 100 followers on Twitter. Things that work also on Web3, fear of missing out, the creation of good opportunities of value that people value. These are the kind of things that we see that work a lot. And referrals also. Lots of strategies for user member get member. The Web3 space is filled with problems, scams. So people tend to trust more their network of people that they trust. And so every time that they see someone using a product, someone talking about a product that they really trust on them, they will have a stamp of confidence to use it also. So this logic of building a community within a community, it's very powerful.
So we kind of like came to the question of how do you create trust in DeFi? So you mentioned that it's a lot of network, you were like trusting your network. Yeah, I mean, like DeFi is a lot, there is a lot of speculative things, right? So how do you create trust in DeFi for such DeFi solutions. And also considering also the security, because it's not only about like people being involved in the ecosystem, but also about like security of the solution, because DeFi is really based on security.
That's a very interesting question. I would say that you build trust by being on a market for a good period. And this also seems obvious, but it's every time that you are working every day to achieve something, people start noticing that. And so it's very hard on the early stage, on day one, because nobody knows you. Nobody knows the product, but when they see the product is constantly evolving, you are always shipping new features, you are always creating new content, you are always getting new users. This starts to get the attention span of people, like why they are getting some early adopters, should I try this also? So by staying in the market for a long period with good results, this snowballs into a trust field. And on this space, things are very fast. The majority of people that don't want to be here or that don't have that don't see the value, they will vanish very quickly. And so by overcoming this and by being in the market with a good and strong positioning on a long period, you get that feeling of trust comes naturally. The security part is a very complex thing. You have to work hard.
Have you built everything, all smart contracts yourself, or have you used any?
We built we use the best practice of cybersecurity, and we leverage the majority of tools that exist in the market, and they're kind of the best practice. What we have done, we audit the smart contracts twice. We build a lot in public, so all smart contracts, everything's available, everything is ready for people to check to, and we are always getting inbound of people with finding bugs, finding information, and we created like a layer of trust to reward users that do these kind of things. But that's one of the most difficult parts in DeFi, because if you want to have something that's very, very reliable, you need to have a very big team, a very good team working strongly on that. And then you need to do bounties, you need to do smart contract audit, that's costly. Also on smart contracts, you cannot change the smart contracts all the time. So you have to be very precise on what you want to build. Go simple. So build things that are simple first, that you know that they will execute properly, and then you can add complexity along the way.
How did you receive like the first adapters? It's like it's exactly like
people that are crazy that jumped as early adopters. They found out the solution, they wanted to test it. They send us a message saying, "Hey, never tested this. This seems awesome. Can I try?" We're like, "Yeah, let's go."
So people want to risk their own money.
They want, but it's because they are also enthusiasts. And those are the users that you want on the early days. Is people that love what you are doing. They will not place their portfolio of their lives there, but they will chip in with a bit. And it makes you were asking about the examples. We had 2 phases on the product. We created a very big wide list of users, made lots of marketing, got a very strong newsletter and users adoption. We rolled the solution on a testnet. And we had so many users on the testnet, people trying, testing, playing around. It was awesome to find lots of bugs. It was incredible. And then we launched into mainnet, and then that amount of users, when it becomes real, when it's your own money, people think twice, and maybe not twice, they think 10 times before executing.
Exactly.
And it goes on it completely differs the scale of people that really wants to test with real money. But those are the ones that give you the best testing, because people will be way more aware of things, and they will print screen, why is this checkbox not being able to check. And these are the kind of things that when you are testing, because they just don't care, and it's like testnet, playing around, it's goofy, they don't care. When you are on real money, people will look into everything. But the early adopters are the ones that have the need. They need something like that. They never seen something like that implemented. They will use it because it fulfills their need. Then you also have this layer of adventurous people that test these kind of things by the sake of, because they are lovers of the ecosystem. And if you are able to work with both of these two initial groups, you get enough users to get like early stage traction. That early stage traction, you do marketing, you try to say, people already use this, why don't you test also? And you scale based on that.
Yeah, awesome. So NFT, how many there is NFT holders?
The NFT holders market, it's difficult to predict because there are so many wallets and users may have different wallets, but something around the range between 200K and 500K, I think that's a solid statistic on NFT holders. There are people that hold NFTs in the past and nowadays. On the boring side is more or less 10 to 20,000 wallets, so I would say something along the lines of 5,000 to 10,000 users.
So there is like not so much. So how do you address this limit of the market?
What we have seen is that this is a market with volume more than a market with, so the assets, underlying assets have lots of value. And so that's the reason on the NFT market to hold such big numbers. We are starting to see the diversification of NFTs for mass market, mainly on cheaper, more loyalty focus oriented NFTs. So, for example, I was in China. I was talking with a guy in Singapore a few weeks ago that they have the biggest NFT market in China, because and it's all about big brands creating experiences and loyalty and vouchers using NFTs that are transactable between users. And I think that that's going to be one of the next currents, or one of the next products that will create this kind of solution for a mass market on today's society. This is gaming. The majority of people will hold NFTs without knowing that they have NFTs. And you can see that in Starbucks launched the NFT program, Lufthansa launched the NFT program, where the users, the hurdles of the crypto barriers, wallet segmentation, onboarding, all of that is abstracted from the user unless the user wants to really tap into that responsibility. And what we see is that the market will grow in numbers based on this kind of experience.
So what is the volume NFT sales right now?
I don't know by heart. I know that the top collections, the ones that we are serving, it's more or less in the $2 to $3 billion market cap, more or less. This is always harder to predict because you have very big chunk of assets that are floor prices, then you have assets that are values at higher levels. But if you do like a blend, it's like we are covering $2 to $3 billion market of underlying assets.
And what about the growth of this market? What is the prediction?
So we are growing on the NFT lending space. Zharta, we have been growing 50% month over month in the last 8 months. And we see that the NFT market will peg also with the crypto cycles. Of course, at least on this early phase, this will then be more established as the cycles start to be less volatile, as more users are and more value is on this ecosystem. But I would say that the growth will mimic the bull cycles of crypto. At least that's our expectation.
So you mentioned something, right? So about the price, right? And yeah, NFTs as crypto, it's a very volatile market, right? So how do you use actually like the NFT as a collateral? Because that's what is like, it's an asset that you use as a collateral for this kind of loans. So is it like really sustainable in such kind of like market to do NFT lending? Because what if there is like default of the borrower and
our default rates are very low, and the reason for this is like the same way that the NFT market is about different kinds of NFTs with PFPs, indie gaming, indie arts, but now going more to financial assets, tokenized real world assets in the future. The same happens to the collections of NFTs. We are serving the most stable collections in the space, CryptoPunks, Squiggles, Fidezas, things that are, that when you look to the numbers, of course there was drops in the price of the assets. The drops were significantly higher in terms of dollars or of stable coins, I would say, because it was also on the crypto markets, the relation between Bitcoin or Ethereum to stables also has impact on this. But when you look to the numbers on Ethereum, the volatility is not so high. And so we made extensive studies on the underlying assets, variations of prices a long time, periods that you can provide loans with stable lines of pricing. And so that was how we built the business rules. So we identified patterns and we created a way for loans to have like a max maturity of 90 days that we want to scale in the future, but that now we feel that it's comfortable for the loans that are being provided to ensure that the asset is always above the principal, or almost always. And so what we do is that we only lend a fraction of the total value of the asset, so that there is a full incentive for the borrower to repay. And this creates a more financial/mathematical relationship based on trust. There is an asset, there is a value of a loan. If the value is below, the user will have a very big incentive to pay, even if the asset is the price, if for some reason the prices drop, as we are in the NFT market and as the NFTs are not fungible and they have their own properties, there is also this higher probability of users to repay. So these kind of incentives pile up and make an ecosystem that is stable.
Tell a little bit about the potential of DeFi and where is like the newcomers can tap into. So what is like areas that are still to explore in DeFi?
I would say that DeFi it's very powerful. It has the possibility to onboard anyone to the space, and you can go from people that are that have lots of capital to deploy and to explore solutions and to get new exposures to new products, to people that are completely unbanked, that can just set up a wallet, can get some initial funds, and they can have access to top-tier financial products that you only have these kind of things when you are on traditional banks and on very difficult processes. The barriers of entry are very low. Of course, it requires study. Nothing in life is easy.
Yeah, you need to learn a lot.
You need to learn a lot, but that's also part of like if it's simple, it will give you smaller returns. If you have more knowledge, you get better returns. That's everything in life follows this trend. I've never seen almost the opposite. Only like on lottery, it's the only way where you can get that around. I would say that the biggest areas to explore in DeFi now it's real world assets, tokenization of it. It's a very strong, powerful narrative. Institutionals want to use this kind of solutions because it reduces costs for them very heavily, and they really want to push this forward. Another narrative that's very interesting is liquid staking. There are lots of new opportunities on that, people exploring that. financial products around NFTs, of course. Like it's one of my favorite topics. I think that is very powerful for the future, and there is the opportunity to come and use or to come and build. So it's a very interesting space to be, and the last learning is, if you want things that are more battle tested, go to products that are here for a long period, because they have passed the stress of time. If you want to be more adventurous, use a small part of your portfolio, test new products, help companies, smaller companies to get their early users and be a part of it. I think that's the funny part of this community tissue that is global, that enable you to work with projects that are just starting to projects that are already unicorns and very stable.
Yeah, it's the power of community is very big, and the space, I feel that it's very friendly at the same time. So it's still not that big space. Everyone kind of like knows each other. So you've been already just talking about this community and how you get like first clients, first testers, right? So it's so you just, once you start, you talk with people, you gain this traction, and also if you want to join some project, I think it's also amazing amazing way to start actually in Web3. So you can learn from people, you can build your network. It's a very great. And in DeFi you have so many opportunities. I feel like that coming from disadvantaged background myself, that is like gives opportunities for democratizing the access to the capital, access to like top financial products as well. So if you like tap to those kind of opportunities, it would be just amazing. And well, thank you so much.
No, it was
a very interesting conversation, and well, NFT lending seems kind of like not boring.
I hope not.
So it's very exciting actually space and very growing. So thank you for these insights, and let's see how you will, reach your next milestones.
Okay.
And
Thanks so much.
I hope to talk to you very soon.
It was a pleasure. Thanks for the invitation. Thank you to everyone that's listening. I hope this is not boring. At least I like it a lot, so I don't know. But it was a pleasure to be here.